What's going on YouTube? Mark Fleetwood here. Welcome back to the Daily Grind Trader. I'm feeling refreshed, re-energized, starting to feel really good. Had a great day with the wifey. We took some time, did a little drive, got some coffee, hung out. I just had a good day and enjoyed my day off. Like I said in my last video, 12-hour shifts, 12 of the past 14 days, only off the last 2 Sundays, my only days off. And this time I made the most of it. Plus I ended up going grocery shopping, firing up the grill, and getting myself some good meal prep for the week because I want to get myself back into better shape and back into better eating habits. My body is starting to feel really run down from the amount of work I've been doing. And a good part of that is poor eating habits. So guys, keep that in mind too. If you do a ton of work, if you work a very physical job, or even a very mentally exhausting job, good eating habits, good health, you got to keep up with it. With all that being said, guys, we're going to hop into tonight looking at DAG, Constellation DAG. I think it's a very underrated project. It's a very low cap project. I think has a ton of potential. So we're going to go in and we're going to start out here on the daily chart. Also, before I get started, I have one question for you guys because I very rarely get feedback on my videos, a couple comments here and there, but not a whole lot. I would like to do a beginner's guide to trading, like a 101 trading video series, like picking an exchange and learning how to use TradingView for the first time, just opening up TradingView as a new user, completely fresh. From that to indicators and learning order blocks and supply demand and different concepts, and just kind of going from video to video to video, from very beginning to more advanced stages. Let me know what you think about that. Shoot me a comment, give me some feedback on that, please, if you will. But now on the daily chart for DAG, we're looking here, and I put these order block lines in here. These are only on lines, but it makes the chart look a little clearer. But the order block itself is going to be this entire high candle. Like this entire candle would be a box here for this order block. And this would be the entire range that it could be. And this one here would be this entire range. So you see the order block that we recently rejected off of. So rejected off of that, but we did make a new higher high. We have changed structure. We have had a market structure shift right here. This green line here was a previous high with a lower low, or we had a higher low, excuse me, and then we made a higher high. So we have shifted the market structure, and now we're in a bit of a consolidation phase. It could be a pennant, a flag, whatever. I don't really draw triangles. I still, in my head, I still see them all the time, but they're not reliable because honestly, price is going to want to get back and test ranges, test areas. And a lot of times you'll get a fake out before you get to move to the direction that's actually going to go. This here is what's called a fair value gap. You've heard me discuss this on a lot of recent videos, where a fair value gap typically wants to get filled before price moves farther forward. No upward wick here on this first candle, a long body second candle, and then no downward wick on the third candle. It means that this gap in price here, there wasn't much liquidity. It was all buying pressure. There wasn't much selling liquidity available. So price moved very quickly without getting any type of retest in that area. So price will likely, consolidate here, come down, tag this area before rising up. Now, it doesn't guarantee that this area is going to fill, but it's also a good area to look at to look at a potential buying opportunity. Plus, if you see here, we had resistance across 1, 2, 3 separate times before breaking through it, breaking through with displacement, excuse me, and making this fair value gap. This is an area that's going to want to be retested as support, where it was a resistance. And we'll get and draw a line here. So that was a resistance. Let's make this line white because it's no longer a resistance, and it's been tested a handful of times already. It's come down and test, come down and test. But I could see a wick through just to pick up that fair value gap and then close back above it. That would be an excellent buying opportunity, an excellent area to get into for Constellation, for DAG. But looking forward, where are the areas that we want to concern ourselves with? Where are areas of price where we could see more rejection? So of course here at 4.6 cents, this will be an area that will be tough to break through. And then the next bearish order block is going to be around 5.5 cents. And after that, we have a fairly large range here. You know, there's a fairly large range where there wasn't a whole lot of trading, and there was a large candle up and a large candle down. The order block goes up to 7.7 cents. And even making it past this first order block to the second one from the current price is about a 36% increase. Now, looking at the macro picture, just in the markets in general, I think we'll have a lot of consolidation until the 26th, I think it is. The Fed press conference on the 26th to identify if they are going to do another 0.25% increase on the federal funds rate or hold where it is at 5.25. I don't know. I think right now there's a lot of uncertainty in the market, and I think that's where we're getting a lot of this consolidation on almost everything. Almost everything is totally sideways and consolidating. So it's hard to see any big move before that. So I think this price action is safe to say it's going to go sideways until that point, and there very could be a 0.25% move, a wick down, fill this gap, and then start to move back up. I think that would be a very likely scenario to see something where there's a bit of a shakeout, especially when a lot of people are looking at this area here as a line of support. Now that has flipped, and a wick below that could shake out a lot of weak hands, shake out a lot of stop losses, get that wick down, get price down to that lower level so more big money buys can come in, fill that area up, and then they're getting in and can break the price above this order block and then actually hit to the 5.5 cent range. And again, that'd be about a 35% gain from where price is now. But if you have the order in for a long position on the fair value gap, you're looking at 46% gain to the next order block. And I think that'd be what I'm looking for. I think I'm gonna look to see if this gets hit, see if this fair value gap gets hit, because it's right on the market structure shift. Plus it's just below the support, which means to me that, you know, there's a good opportunity to see the market push below that just to get weak hands out. And then here we're sitting on the 50% retrace, getting down to the 62% would put us right in the middle of that fair value gap, just below the market structure shift. So I can see that happening. You know, that's it, guys. I'm not going to dig into the deeper and like 4 hour to 1 hour, anything along those lines. Just because as of right now in the consolidation, I don't think there's going to be a big move until the Fed figures out, or we get the announcement from the Fed as to whether it's no increase or 0.25% or whatever they do. With that being said, guys, that's the video for tonight. I hope you enjoyed. As always, until next time, peace.